Welcome to Momentum Monday. Today is May 31st, 2020, and Howard's breakfast is bacon and beer.
Yes, it's good luck. Every time I have a beer, the market goes up. Hang on. I never drink. Ivan and I had a run on the beach. Ivan, how'd I do?
I think you're in really good shape for your age. So really well. Yeah.
Anyways, look, and I made bacon today too. It's like, oh my God. It's not like making your own bacon. I mean, it's really a healthy food, all protein.
Yeah, I agree. Bacon's good.
So a lot of people took notice that you were wearing a collared shirt while you ran.
Yeah, I saw that.
I found nothing wrong with that. I thought it was I feel like if you're doing a workout, people shouldn't judge what you're wearing. The point is that you were working out.
Exactly. I mean,
Yeah.
the comments you leave just show your current mental state. So I'm not really paying attention to that. So
Yeah,
whatever.
mental state is quite low.
If it helps your frustrations, say whatever you want. I really don't care.
That's what helps my frustrations, right there. And this.
Yeah, we should check that stock STZ. I don't think they're doing that well.
No, I made a really stupid, lazy a weed play. Hang on, let me just fire this up.
All right, we'll wait for that. Okay.
Not home. This is the kind of shit you do when you have the home to yourself. She doesn't watch YouTube. Look at that. Got the torch. I'm celebrating the VIX going under 30, Ivan, so why don't you start?
Yeah. Well, we're looking at the chart of the Nasdaq composite, which is pretty wide encompassing, since there are thousands of stocks in the index.
Is there thousands? I didn't know that.
Yeah, I'm not talking about the Nasdaq 100.
Oh, I know. I didn't know that.
Yeah, it's a very large number of stocks, mostly of them mid cap, some large cap, and higher growth names. That are not really related to the old economy like finance and energy.
Yep.
So I think it's a good indicator of the future economy in a way. Looking at the chart, and especially at the volume pattern, I mean, it's mostly accumulation days.
Yeah.
Mostly, I mean, if you look at the past few months, there've been very few.
This hammer in April was a beauty.
Very few distribution days, which just shows you that institutions continue to put money to work.
Yeah.
And even last week, when we saw that quick pullback in tech stocks, there was a slight rotation. If you remember last week, I told you that the only way the S&P 500 is going above 300, if there is a rotation into the old economy stocks, financials, energy, industrials. This is exactly what happened. We had a big gap in small caps, in all those stocks that were hit pretty hard during the lockdown. And they helped the S&P to go above its 200-day moving average.
It snuck just above it, huh?
And not only did the S&P 500 go above its 200-day moving average, but also it tested it twice and it helped. It just shows you deep buyers are really active. They're just...
Deep buyers could be the government, but hey, a buyer is a buyer.
Oh yeah, absolutely. It could be the government. Yeah, I mean, especially
even better. Money
with that price action.
People complain, and there's no better person to trade with is the government. If they're buying, Warren Buffett, if they're buying, the dumb money is working.
Yeah,
if you're buying ahead of the government, they got endless pockets. I mean, that's a good thing.
So yeah, exactly. The dips continue to get bought. We continue to see constant mini sector rotations, like the small cap, the laggards would rally for a couple of days, and in the meantime, the tech would pull back to its 20-day, rising 50-day moving average, and then they would reverse. The rows will reverse.
Yeah, we saw that in Shop, Ivan. Pull up Shop. Like it went down 100 points, and I bought that dip, and just a little bit, and boom.
Yeah, I mean, all of them, Netflix, any single tech or software stock, the dips continue to get bought. And, I just went through a bunch of charts in the tech space, especially in software. So much strength, so many setups.
Yeah, software really had a beautiful day, including enterprise. Look at Slack, one of my newer positions above 30. I don't know if I'll ever sell this. The kid is just, I don't know how that is probably the best looking tech chart. Obviously, it's highly valued. So again, this is what makes it hard. But I mean, there is no better brand that's getting discovered by the masses than Slack. And the CEO continues to do a great job just focusing. Microsoft's come at him with Teams. Everybody's coming at him. And this is the Zoom story. The same reason people have attacked Slack for not owning, including myself, it took a while from the direct listing, are the same people that go after Zoom saying Google, and Google's doing a great job with Google Meet. But if we look at Zoom, I have another one of my faves. I like that they do one thing. It's volatile. Listen, you're paying 50 billion. What is the market cap? 50 billion. I still think it's a multi-$100 billion company over 10 years. Could it go to 20 billion on the way there? Yeah. So you have to keep that in mind with your position sizing. But Google will trick their way in. I used a lot of Google Meets this week, but I still like Zoom, and that broke out. But Slack is the one that really interests me, because it's still really under-owned. Yeah, Google kind of looks like the Nasdaq there, huh, Ivan?
Yeah, of course they do.
Yeah. So, that's what you buy Google when you're buying the Nasdaq. But if you want pin action, I think there's some stock in there. What are you looking at? So Slack is one that I'm looking at. Elasticsearch reports this week. It's one I've been talking about.
Zoom reports as well. Last week, if you remember, we talked about the biotech sector, which was one of the leaders. He had quite a few distribution days, and obviously that meant something, because it had a pretty substantial, not substantial, but 8-9% pullback to its 20-day moving average, where it held. But software right now, it just continues to be extremely strong, and this is where most of the setups and the leaders are right now.
It makes me more comfortable, obviously, because I just feel comfortable. I use the products, and I know that the corp dev teams, and I know people that can talk about these stocks. Biotech is a whole new sector for me, so it's nice to see, for me, selfishly, software and working. The problem is the valuations.
So from a sentiment point of view, there are a couple of things that I think are kind of important right now. One is that the market continues to buy the bad news. It doesn't really care about the bad news. It just keeps getting, going higher. And just a year and a half ago, just a mere mention of tariffs from China would send the markets down 2-3% for the day, or more, or a lot more for the week.
True that.
And since then, the relation between the US and China has gotten worse.
Yep.
And the market just continues not to care. I don't know who the buyers are, but they are buyers. And every dip continues to get bought. And the other thing that needs to be mentioned, that currently 96% of the S&P 500 stocks are trading above their 50-day moving average, which is a very rare, extremely high reading.
Short term. It's kind of bullish over the year. I read, I'll show an article by Ryan Dietrich at LPL, who I trust, on math, on just odds wise. He says, the math on these moves above the 50 and 200s indicate that a year out stocks generally are higher. But short term, we are like.
Short, that's what I mean. Short term, for the next 2-3 weeks, we might see a little bit more.
I'd be shocked if we see a pullback. I'd be shocked.
Yeah, we might see more volatility, like a slight pullback, or just range bound action.
Or rotation, more of the rotation that you're saying frustrate the most people. Because I look at like Spotify, it pulled back off a great break. I look at Spotify and I'm like, okay, good. Giving people a chance to kind of load up here, either to trap them, of course, if the market implodes. But I mean, this is what you want to see, you know, light volume pullback. It's giving people a chance to miss this huge surge to try it. You know, so there is some rotation around the biotechs, like you said, are very volatile around that long-term breakout, which can happen.
Yeah.
We're not sure, but individual stocks continue to do well in that sector. Regeneron had a massive move.
Yeah, massive reversal, exactly. Massive, the dip near the 50-day was bought.
See the volatility around that breakout around between 500 and 600, and then boom.
Yeah, exactly.
You know, it's shaking out people. It's just shaking out people. Exactly. The momentum is not easy to harness. You have to stay with it, and you have to position size very properly.
Exactly. Many people ask, what does it take to capture a long-term winner, a 50, 100% winner? Well, it takes a stomach. You should be able to stomach a big drawdown. Because
yeah, I'm gonna show people later. Even that, I just like to, for what I think about with momentum stocks, and I'll show Rachel's account later, who we've slowly built an account for, Rachel and I. And what it takes for it, would you buy these stocks for your kids? You know, I like to say this all the time. If, you know, my daughter's 21, it gives me more perspective when we talk about a stock together. I'm like, are we worried, like when we bought Bitcoin or Ethereum, are we worried what happens in the next year or two? Or are we going to just check back on this quarterly? And you'll see the kind of portfolio that you can build with great companies over time. But if you're trying around the edge to do what Ivan does, you have to be very specific, or what I do, you have to be very specific, and you have to position size properly, and you have to really try and understand the companies and use the product. That's why I don't do it around biotech. I don't know the companies. You know, on software, the CEOs are talking on Twitter all day. Or they come on my podcast, or you know, or they're checking stock picks, like they're in tune with their companies. You know, I look at Cloudflare, I can talk to the CEO, you know, which is what's the name of the Net. I mean, we're all communicating, right? I'm not that famous, and the CEOs are all attainable. I'm going to have DraftKings CEO on the podcast soon to really talk about how big this space can be. I mean, the valuations are getting crazy, but look what that's done. We'll come back to that later, but you keep going on your stuff, Ivan, and then I'll go through my screen.
Yeah, exactly. I mean, anything in that field is just exploded.
Oh my God, what's Gamble? That's a great ticker.
It's a company from Malta. I don't even know what they do. It's just anything related to that, sports, gambling.
You and I should just set up a ticker, Ivan.
Yeah.
Well, the other one is GAN, which is, I'm going to get into it later, but it's the back end software for, it's kind of like the API for, it just went public, for that DraftKings uses. So StockTwits is surfacing up all this stuff too, right? Like I didn't know what GAN was until 2-3 days ago. I bought a couple hundred shares just to play with the crowd at like $20. I'm up $400. You know, so you don't have to put thousands and thousands of shares to work to kind of learn how to trade anymore too with momentum. You just got to get a feel for what your stomach can take. Around sentiment, Ivan, I would say really frothy. Now, I don't think it works as well timing wise to call tops. None of the signals work better to call tops. I think all the froth, panic works great at bottoms, doesn't work as well on froth at tops. But I am seeing from the DraftKings to the GANs to the valuations, to the penny stock biotechs that I see on StockTwits. People are trading Luck and Coffee, which is a fraud. People are trading SPACs like they're like they know what they're doing. So I see indications of froth at a time when, like you said, short term, when 90% of stocks are trading above their short. Yeah, that stock's too been a hot one. So at a time when, you know, all news is good news, that can switch very fast. So what you said earlier, Ivan, was really interesting.
Yeah, typically the markets can give back 3-4 weeks of gains in 2-3 days. So keep that in mind. That, you know,
especially around momentum. Especially around
momentum right now, but it can change so quickly.
Yeah, but I think it's the same stuff that's leading, Ivan, that hasn't.
Yeah, as I said, most of the good setups are in software. There's just so much strength to software. Probably 100 setups that are just companies that just keep going higher.
What's that? Tenable? What the hell is that? Cybersecurity.
Some cybersecurity, and there's just so many of them. It's just
Well, I think Zscaler. So another one that just it's a
Oh,
loose.
exactly. Yeah, they exploded on Friday.
Yeah, so that's going to go much higher. If we took a monthly on that, that's a monthly closing high on all-time volume. Give me the monthly for that, Ivan.
Yeah, I'm having some issues with my mouse. Like it kind of disappeared, so it's hard to navigate.
Okay, I'll pull it up. I don't have Market Smith up. I'll use Koifin. So I'm going to take over the screen for a little bit.
Well, I need to let you do that.
Oh, there you go. There you go.
Monthly.
So look at that shakeout in April. $36 to 100. Okay, so you have to take that bar out, and okay, so you can see it's going to be very hard for people to catch up with this. You know, $12 billion company, it's not letting anybody in for the last month. It's gone straight from 40 to 100. Massive volume, all-time highs, monthly closing highs. They're not the only one in the sector. CrowdStrike approaching all-time highs.
Yeah, they report earnings this week.
These are the two leaders. Obviously, Cloudflare and Fastly, FAST.
Exactly. Oh, you mean FTNT?
No, FSLY. That's sorry. I meant FSLI, Fastly. Fortinet's a dog. Fastly.
Okay. All right.
Oh, no, Fortinet's doing well. Sorry.
All of them.
Yeah.
Even
so Fastly
is kind of trying to, you know.
Yeah, but why play around with that?
Exactly. Yeah.
Yeah. So stay with the modern security companies. I saw that even, like we said, Slack, Spotify. One that I've been watching, Ivan, is Elastic, which I've owned since, you know, on and off, but lately since the 50s. It's pretty much, you know, they have earnings this week. I think they survived the Amazon scare. You can see all last year was kind of a write-off from Amazon, the stress over Amazon entering their space theoretically. You can see that just gave the stock time to catch up to itself. I think if they have a great quarter, you won't be able to get into this stock. It's one of those gappers that just go to 120 and not look back. Valuation be down. I'm saying in this market, I'm not like, this is the kind of silliness that we'll see when the Fed's backstopping things. I'm going to go through some of my other ones here, Ivan. Let me just, Zendesk, which had been kind of sleeping for a while.
Okay, let me stop sharing then, so I'll let you share.
You want me to share? Okay.
Well, I need to stop sharing so you can share.
So let me share my screen.
Okay, here we go. My mouse showed up. So I just stopped sharing, so you can share now.
How do I share my screen? It won't let me. Host disabled.
At the bottom of the screen, if you move your.
No, I know. It says host disabled attendees screen sharing.
Huh. Okay. Well, click on share screen, then I'll allow it. Let's see.
I did.
You did? I didn't.
Yeah, it's still saying host disabled. It's a quality show we run. It's okay. You can run.
Zoom updated their software last week, so I don't know. They have some new.
Right, you take it back. I'll talk through some of the stuff I wanted to talk about.
Okay.
So I see sentiment as frothy, but that's not a great signal of a top. Panic is better signal of the bottom than froth at the top. But I am very conservative right now, and I want to explain to people why. You know, I've told some of my readers it's combination of just, you know, I didn't expect the recovery to happen this fast. I sold my Lulu on Friday. The rest of my Lulu when it went up another $10. You know, and I try and teach people relatively. If you had told me when the world was panicking at 130 without the stores open, you know, I was basically the Lulu Nike fund. If you had told me that I would get out at 200, $240 in a couple of years, that was why I put on the trade. So if you're going to offer me $300 6 weeks later, I'm not going to, you know, those are like my 2-year price targets, and it happens in 60 days. I'm going to let an investment become a trade. Can Lulu go to 700? Of course. You know, do I think I'm going to have a chance to buy that company back at some point? Of course. May it be a higher price? It could be. But, you know, at $50 billion, I try and, when I put on a position, kind of think through what I'd be happy with if, you know, the if word. And I'm quite happy with 300. Nike at 100, didn't think we'd see that for a year or two. You know, I thought we were in a bear market. If you pull up Nike, Ivan,
Yeah. I was just looking
You
at the
know, we're in a bear market.
cap of Lulu, only 37 billion, and their software companies are already at 50 with zero earnings.
Yeah. So again, you know, at my age and the amount of risk I take at startups, I think technically I'm very bullish on the monthly closes on things. But I run a different business day to day. So I'm trying to give people, you know, kind of the view, you know, and share people with, you know, what I do, but not, you know, you got to factor in my age and the other risk I take. You're mostly cash, are you not?
I have a few positions, but yes, mostly cash overnight. So I'm just active during the day, and it's been hard actually to catch up because the market has been gapping up.
But you can't worry about that. You got to stick to your game.
Yeah.
Right. I'm just going to go through some other ones. The DraftKings one really interests me because of the valuation. And my friend Shiv in Singapore, he's an enterprise guy who works at Amazon, and he's a subscriber, Ivan, to you.
Yeah.
I mean, I miss this. I pointed it out to people at $10. I miss this because of valuation and because, you know, sports being down, and I don't use the product. So again, like I try and own stocks where I'm living inside the product every day, like Slack, and I don't use DraftKings. Plus there's no sports. So I think this is a function of the consumers know the brand, very bullish on there's very few pure plays in this space. Now the market, the banks and the direct listings and everything are going to solve this. You're going to see a ton of supply in this space, but this is a really crazy expensive. I think that market cap is wrong. If it was 2 billion, I actually would be very bullish, but I think it's closer.
That's what I was thinking. I don't know.
I think it's closer to 12 billion, and which has kind of kept me out of the stock the last 30%. You know, with sports being down, so I think it's factoring in a lot of good news. On the other side,
85 million
is Penn Gaming, which has been like an 8-bagger.
Oh, Penn. Let's see.
Yeah, Penn, which has debt, which is another casino stock. But here you can see relatively
3 billion, 3.8.
Yeah, relatively a much cheaper stock. Now, the hidden gem, and this is what Shiv just sent me an email around this, is people don't know this, that young people know this, that Davey Barstool Sports, they own Barstool Sports. So I think what they've done that people don't get is they have a lead gen machine in Barstool Sports for this new gaming. And I don't think the kids, if they want to bet they'll figure out bad UI or you know, UI does not matter as much when there's just constant gambling. So when sports opens up, they may play catch up in valuation. You can see it at $3 billion valuation. You know, close your eyes and forget about the crash, okay? Just take out those 2 months. And, you know, the stock was trending at a 25, 26, 27 forever. The debt is what, and the closing of casinos is what, you know, a one-time event. So it's kind of like a flash crash. Assuming casinos do open up, they're relatively an incredible play on gambling. Do I like the product? No. But Barstool, Dave, they just have an incredible lead gen engine for that. And, you know, I was thinking seriously about DraftKings. They could buy StockTwits and be, you know, have their own mini Barstool at work. So there's going to be a lot of acquisitions in this gambling space. Think of this as like brokerage 2.0 or brokerage 3.0. You know, you're going to have 24/7 sports betting. We're at a perfect storm where the states need the revenue. And so as a momentum trader, as a buy the dip trade, there's going to be a lot of support in these stocks as they crash and move around here over the next year. And so I think Penn, DraftKings, GAN, they need to be on your radar. And then I think you're going to see, you know, a bunch of other things go public and do direct listings in the consumer space. So those are the things that interest me. I'm trying to think if there's anything else that I like. Elastic, we talked about. Is there any other earnings coming up this week, Ivan?
There are quite a few, especially in the software space, and we already covered them. Zoom, Elastic, there are a few others.
Okay.
Work, Slack, they also report. So
yeah,
quite a few earnings in that space.
I think Spotify is coming out too.
I think they've already reported, right, Spotify. But
okay.
Let's see.
Yeah, AYX has recovered.
Yeah. See that gap
Probably
here?
my favorite momentum setup, Spotify. You know, the market loved the news. Work and Spot are my favorite setups. Can you pull up Zendesk for a little bit? Yeah, I think this, if it breaks 100, could run. You know, it's a stock that I've watched forever and owned for a meaty move. But I think Zendesk, as the economy recovers, you know, customer support software, they are the brand. I mean, it's not a cheap company. It's trading. And what is the valuation?
10 billion.
Could that be a $20 billion business? No one used to think it could, but that's back on my radar. You know, it's been basing for a year and a half, survived the economic crisis. Facebook is getting into commerce. Shopify continues to expand. So Zendesk is back at on my enterprise top of list, and it could break out. Obviously, Shopify is one of those.
Yeah.
It's a beast. I think Facebook is a beast. As much as we all hate Zuckerberg, it's a beast. It's like, you know, Facebook is a buy the dip at this point as they move towards e-commerce and crypto. And then I've been in the crypto space. Oh, Twitter. So here's the enigma. Everybody that uses Twitter is buried in this stock. You know, it's kind of like the people that are short Tesla. It's the same group that are long Twitter. You know, I continue to be befuddled when I have to have this argument with people. Do I like or do I not like Twitter? I want to own the stock. I think it's a $60 stock. I think it's a $100 stock, but I don't think the current business model and an executive team have what it takes to truly, you know, I look at Slack. What's the market cap of Twitter, Ivan? 24 billion. Okay, let's look at Slack's market cap with a fraction of the brand awareness. Here you got a guy, you know, the kid running Slack. He's on Twitter every day, talking about his business, talking about the world, talking sincerely to his customers, making the best of this pandemic by onboarding just millions of customers, right? And then you have Twitter, which is tone deaf to the world in which it's engaged in, right? And getting pushed around by Trump, pushed around by Zuckerberg, half-ass measures, half-ass business model, half-ass execution. And so the stock market kind of works, right? Like, I know we laugh about valuations of the leaders. And so everybody goes, Twitter's relatively undervalued. It could stay relatively undervalued to underperform forever based on the way it's running its business. And if Twitter takes off, trust me, you're going to make more money in Facebook and Snap and Pinterest. Let's take a look at Pinterest.
The Twitter is like 2 times cheaper than Facebook, right, at this point.
What do you mean cheaper? No,
like
Facebook's
PE ratio is two times.
Yeah, it's not growing like Facebook. Facebook's e-commerce. Twitter's still an ad-based business with no data about their. I'll use Ramp Capital as an example. Let me explain to people Twitter. Ramp Capital is phenomenal at Twitter. Okay, I'm great at Twitter. There's thousands of people that I know that can't make a nickel off of Twitter, and they've got their whole brand there. They're DJs, right? So Joe Rogan moves to Spotify. Twitter has not DJ'd anybody. No, that's LiveRamp. I don't know what LiveRamp is.
I know. It's just the same, simple, but it looks good. So
that's funny. Ramp should just go public. They should buy Ramp. So I don't think Twitter's doing a good job supporting its DJs, right? They're doing a good job inflaming people. And, you know, it's all panic. If you go to the Twitter moments page, it's all Trump, COVID. These are now page 10 things. You know, the world has other, you know, page 1 things going on, whether or not we like it. So Twitter, as much of a real-time network as it is not monetizing properly. So that's why it really bugs me, and I really feel that stock could go much higher, but they have the wrong business model. I'm trying to think what else. Boeing is one that I put on a little recession position in. So I feel like if the economy approves, if we look at a monthly chart of Boeing, and a lot of smart people that are trend followers are like poking around in this, so it's not our expertise. But the last few recessions, you know, the stock has had humongous runs. So in the 90s and in 2008 and in 2001, the stock always has great runs. Okay, so debt aside, obviously that's the risk. The equity could be worthless. But if we are bottoming, Boeing's not going anywhere. They'll raise their money. You hold your nose. That could be a $250 to $300 stock in the next 2 years. So I've swapped out of some of my momentum into names that I don't necessarily normally follow. Airbus as well. Maybe that's even a better play. And they make beautiful planes, obviously. I've been on a few Airbuses. So those are kind of things that I'm looking at to try and get my equity exposure higher right now, Ivan. But right now I'm under 50% long-term exposed. But the beta in the stocks that I own is very high. Yeah. But on these rotation days where it's just financials going up, I underperform,
Yeah, I think most people are.
And I wouldn't get tricked into financials. If I look at Goldman and JP Morgan, God bless, I hope they double, but that's just good for our stocks. I think you're going to look back in 5-10 years and you'll see the same things with these banks, slow drift down to flat with a lot of spikes in and around speculation. And I think for the market to get tipped over here, Ivan, it's going to take something besides COVID and China. I mean, those are front page news every day. So I think sentiment is going to drive, just overall market sentiment is going to drive swings right now because there's froth and then there's panic. And then I think something that we're not reading maybe on page 10, whether it's, the vaccine getting pushed back a year, whether it's, the economy, just people not traveling, just people not going back to work and kind of negotiating with their employers and just all the unintended consequences of having the economy shut down. So it's not like a clear road. But if we go back to the S&P, Ivan, or the wall of worry has never been bigger, right? And so we could just have this steady march higher as the government inflates this market and demand is not great. And so they keep battling a deflation that, the rare assets, these Spotifys, these Slacks, these Elastics, these, enterprise software stocks could continue to gain in valuation. And then I wanted to bring up crypto, Ivan. I'm pretty bullish still. In a world of software and money printing, I think if Bitcoin can get above 10,000.
Yeah, it's been coiling between like 8.85 and like 9, 8, 10. So 10,000 would be a big.
Yeah, I think what will surprise people, I talked to Brian Shannon about VWAP. Crypto is becoming slowly very institutionalized, not at scale, but just institutional. Coinbase, they're launching institutional products. So the volatility is going to drop. And that's what you're seeing. You're seeing these 10% moves instead of 30% moves. And I think people will be surprised. It's not going to just be a quick, run from 10,000 to 100,000. There's a lot of institutional money and trading tools available the base is great. The macro seems right. The software seems right. But I also think there's so many institutions now trading it and there's so few options to trade. Everybody's just eyed on Bitcoin that I don't think it's going to give people the moves that they were expecting. But in terms of a software brand, that's why it's in my 8 to 80 list. So, all right, I think we've taken enough of people's time.
Exactly. So just one last thing real quick. The US dollar last week broke below its
that's interesting.
Moving average. So it's starting to pull back. So if
that's bullish. That's actually surprisingly bullish.
Exactly. If this thing turns into a trend, this is bullish on stocks, bullish on market stocks, on gold, on Bitcoin.
A lot of the macro guys, their bearish thing is all based on the dollar jihading. Exactly. So I think that is one to watch. Good point, Ivan. So I think this is why
the best performing year for the market, 2017, was the worst performing for the US dollar. So that might be a big theme.
Might be a big thing. And I'm going to end it with this. I get asked all the time about the economy, Ivan. You do too. Stop it. People, the average 99% of us get stuck talking about gold, the economy, unemployment. The stock market is not the economy, but once or twice a year. And even then it's for a month at a time. Okay. The stock market is driven by supply demand at a micro level. Okay. DraftKings has nothing to do with the economy, nor Penn Gaming did because of its debt for a few months, but you could see how people were fooled out. Casinos, yes. Hospitality, yes. But there's so many companies that are on the micro. And so really learn to stop reading macroeconomic news if you want to invest well, okay? So the macro people are stuck with the world ending because they think the dollar is going to explode because of scarce dollars. I think that's something you should watch for. But you can see how they're just going to dig in here. Macro people just dig in because their time frame changes every minute. But without the US dollar exploding, their whole macro thesis, goes to shit, right? Because in their world, Bitcoin and gold should be exploding right now.
Yeah.
And gold going up, but it's a boring trade. You just get stuck in these like macro theses. It's great, own a little gold as I do, but like you're gonna kill yourself waiting for these moves. They're so overtraded. The institutions have so many ways to expose themselves to these sectors that if you're using just gold, Bitcoin as your like thesis, you're wasting your time. You're better off focusing on the micro, finding great companies with high relative strength that are breaking out. And I try and give this advice to people all the time. And that's what this show's about. But Ivan and I won't talk about the macro. We will try and find what is page 10 coming to page 1, but right now page 1 is obvious and it's not moving the market, and we don't know why. Ivan and I don't know why, except that the breakouts all are moving in the position of like growth stocks still.
Yep.
Software. All right, buddy.
All right then.
Good to see you today.
Likewise.
So when are we going to run? You want to run tomorrow?
Well, I work in the mornings, Howard, so I trade.
The beach is open all day, buddy.
Yeah. I mean, maybe.
The bacon and the cigar and the beer. Don't tell Ellen.
Sure.
I'm smoking in the house. She's going to smell it.